So just to give you a sense of what we're going to be doing today, I'm going to give you about 2 minutes on why AVI. If you want more information about the background of why we're doing this, you've all gotten brochures, there's videos online, a lot of resources, and I'll tell you how to get them. But what I really want to focus today on is what sort of things folks are going to come into these drop-in centers and ask you. They're going to ask you, can you explain this notice of my assessed value that I just got? What's the deal with this homestead program? And what do I do if I don't agree with the value of my property that the city assigned? What happens next? So those are the three basic things that have to do with the valuation of the property. Now, obviously, folks then have a lot of other questions about, well, what does this mean for what I pay? What are my taxes going to be? What happens next? I can't afford that. And that's where Frank's going to come in and talk about a lot of the existing taxpayer assistance programs, because we want to make sure that folks, you know, if they have anxiety, know that there are programs out there to help them and help them walk through what the different ones are and what they might be eligible for. So the sort of 2-minute background, though, on the actual value initiative is the fact that in the past, the city's system for assessing properties for tax purposes was broken. Some neighborhoods, we maybe did the assessments regularly and the property values sort of matched what was going on in the market. Some neighborhoods, that wasn't true. We wound up in a situation where you could take two very similar properties, but they would have very different tax assessments and very different tax bills as a result. And basically, that's not fair, it's not sustainable, and so that's what we're trying to fix. 2 years ago, the voters of Philadelphia created the Office of Property Assessment. We've been working for 2 years to finally get the values right. The most basic question folks are going to come in and ask is, you know, what is this number? This is the number, when we assign a value to your property, of what we think your property is worth now. What is its current market value? What could you sell it for? What would somebody buy it for? There's a bunch of different ways that we get to that. You don't need to get all the details of those at those sessions, but that's generally what that number is. The second part of AVI also is simplifying the formula that we use for calculating a tax bill. In the past, it was that value assigned by the city times 32%, then times a tax rate, which for 2013 was 9.771. It was a lot of steps, sort of unnecessary. So as we do AVI, we're going to simplify that to simply value times tax rate. And because of changing that formula and the fact that we know that virtually all properties in the city were underassessed in the past, some a little underassessed, some a lot underassessed, we know that the tax rate is going to drop dramatically when it's set. So number one thing people should know is do not take this new value and use last year's tax rate. You will give yourself a heart attack. That's the number one thing that folks should not do, because that's creating a lot of anxiety. But I wanted to take a step back and start with the Homestead Exemption. So if everyone could flip to the application in your packet, it's the one that says Real Estate Tax Relief Homestead Exemption.
If you don't have a packet, we're making more copies, but please turn to your neighbor, introduce yourself, and then share the.
Okay. Now the Homestead Exemption is a new program that's being rolled out in 2014 along with these new values. And what it does is it's a program that reduces the taxable amount of the assessed value for homeowners. How it works is basically, say the property is worth $100,000. If you have been approved for the $30,000 homestead, subtract $30,000 and you pay the taxes on the remaining amount. So $100,000 house minus a $30,000 homestead, you apply your tax rate to $70,000. And that's a flat $30,000. So if your house is $100,000, you pay on $70,000. If your house is worth $1 million, you pay on $970,000. Okay, they do not have this form. Oh wait, no, it's on the back of one of the pages. So look at the back side. So I want to walk through the eligibility for this, and a lot of folks, when you're talking to them, if they're a homeowner, your first question should be, do you have the homestead? And the way that you can figure out if they've already got it is, one, if they've brought their assessment notice with them, it'll say homestead yes. Or I believe at the site there will be computers or tablets where you can look up people's account information, and you can also then check online yes or no. But if folks say, you know, I don't have the homestead, I didn't apply, you want to make sure that you get them to apply that day. There's no reason to wait. And this program is open to anyone who owns their home and lives in it as their primary residence. That is it. It doesn't matter how old they are, what their income is, how long they've lived there, what neighborhood in the city, whether or not they have a mortgage, whether or not they owe back taxes to the city. Everyone is eligible if they own their home and use it as their primary residence. So I want to just walk you through how to fill this out, because that's what folks will be coming in needing some help with, is how to complete this form so that they can get approved. So the first thing,
The form's not in this packet.
if the folks who've been able to find it, please help the folks who haven't found it yet. It's on the back of one of the pages.
It's on the back of the instructions.
It's on the back of the instructions. Mary, can you go around and help the folks who can't find it? So the first thing that you put in, it'll say owner 1 and owner 2. This is where you list the owners of the property. After that, the property address. Hopefully, this is folks' home. They should know their address. After that, it says OPA account number. Now, this might throw folks off a little bit, this OPA account number. It's what used to be known as the BRT number, but now we've got the OPA. It's the same number. It's a 9-digit number that uniquely identifies this property. And so it's really important that folks include that OPA number on this form. So if they've got their assessment notice with them or they know that number, make sure they write it down. If not, if there's computers on site, use them to look up the account number online. We'll be able to show you how there. But all they need to look up the account number online is their address. Putting the account number on this form is really important for speedy processing. Basically, if it's missing, it goes off into a whole different queue. We need to manually look it up. It takes longer. It's more expensive for the city to process, and it'll be longer until the taxpayer finds out whether or not it's been approved. So it really makes a big difference for folks to include that OPA account number on this form. And the OPA person at these sites will be checking when these get turned in to make sure that they've got that account number on there. Next up is the mailing address.
You're going to have a computer on site to do it?
That is my understanding, is that there will be 2 computers on site for lookups.
Because I think people aren't going to know it.
Right. We're going to try and convince folks to bring the forms. I have found that they do show up at community meetings with their forms, which is good. They love to show them to me. So next up is the mailing address. If folks, for some reason, don't receive mail at this place that is their primary address in their home, put in a mailing address. It's pretty rare, but occasionally if it's a senior, they may have all of their mail sent to their kids or to somebody else. So it's not out of the question that somebody would have a mailing address different from their primary residence. And then we ask folks to include their phone or email. Those last 2 aren't required, but we really ask for folks to put them in because if there's a question or problem with the application, we want to be able to get in touch with them and sort it out rather than it just sort of get lost in the ether. So that's all of the basic contact information. Next, there are the 4 questions. This is actually one of the simplest government programs to apply for ever. Question number 1 is this your primary residence? Select yes or no. So if this is, in fact, somebody's primary residence, they should select yes. And if for the most part, people know this is my home, I live in it. But if they have questions, they're not sure if it's their primary residence, ask them things like, well, where are you registered to vote? What address do you put on your income taxes that you send to the IRS? Where are your kids registered to go to school? What address is on your ID? Those are the sort of things that indicate that this is your primary address. The next question we ask is there anywhere else that you use as your primary address? This is us double checking. The answer here is if you don't have another home, if this is your primary residence, you should put no. But a lot of times, folks, maybe they have a second house in Florida or they have one in New Jersey and they're claiming a homestead exemption there because they're worth a lot of money in those 2 states. You can't get more than 1 homestead exemption. You can't get 2 in the city. You can't get 1 in Philadelphia and 1 in Florida. And we'll be checking back and forth with the other places that offer these. So we want to make sure that there's no other primary residence. So when we ask you, do you have another primary residence? If you do, if you're claiming somewhere else as your primary residence, you have to tell us yes. Otherwise, folks put no. The next question actually is tricky and trips people up a bit. It asks, are you part of a cooperative where some or all of the taxes are paid jointly? Co-op buildings are actually pretty rare in Philadelphia. And what they are is they're sort of like condos. They're multi-family places. But rather than you owning the individual units, the folks that live there have a share in the building. Generally speaking, anyone who isn't sure if they live in a co-op, they don't. The folks who live in those 12 buildings know it. For the most part, most Philadelphians, the only time that they come across, co-ops is watching Law and Order. Somebody's always getting murdered in a co-op in Queens. That's pretty much the only time that we have any experience with co-ops. So for most folks, this answer is going to be no, unless they absolutely know that they live in a co-op. And then the last question is this property used for anything else other than your primary residence? So if your home has also got something else going on, maybe you have a rental unit on the first floor, maybe there's a store on the first floor, you're still eligible for this program, but only for the proportion of the property that is used as your primary residence. So if you've got say it's a 3-story row house and it's got, a store on the first floor, you would say, yes, there is something other use in this property. And then it says, if yes, what percent? And you'd write 33%. 1/3 of that 3-story building is used for something else. And so that person would then be eligible for the homestead exemption on the remaining 2/3 of that building. It's then important that folks sign and date that. So this is the homestead application. Now, some folks,
So I just want to go back. So for somebody who does know they live in a co-op, does that make them eligible for the homestead exemption?
so if they do live in a co-op, because co-ops only have a single account number, because there's only one owner and they all have shares, they actually have a whole separate form. At this point, I think I've talked to every co-op building, and they submit one for the entire building. So if it's an individual person in a co-op, you refer them back to their building management, because that's who will take care of the application. At this point, I think I've spoken to all of them, so that they either have already submitted or are in the process of submitting. Now, some folks have applied and received a letter from us saying, we couldn't grant your homestead exemption. And this is why. And there's a couple of different reasons why we wouldn't have been able to grant the initial one. We told them what those were. And so it might have been incomplete. Maybe they didn't answer all the questions. Maybe they didn't sign it. So we sent them a letter and said, hey, it's incomplete. And on the back of that letter, we gave them the remedy. What do they do next so that they can get it if they are eligible? So in the case of incomplete, all they have to do is reapply. Basically, for any reason we denied you, if you think that you are still eligible, all you need to do is reapply. There is one exception. If we told you that there is an owner mismatch, that the name on the application doesn't match the OPA records for who owns that property, we had to deny you. And there's a couple of reasons. One, maybe it was just sort of a spelling error and we couldn't sync it up, or maybe, you got married or divorced and your name changed and that's why it didn't match. In that case, folks should first call us at our hotline, which is 215-686-9200, and sort out whatever spelling error or small thing it is, and then reapply once everything's going to match. Then there are folks who are in sort of trickier situations, that maybe they've been the subject of deed fraud, that somebody has stolen their house and somebody who is not them now has their name on their deed, but they shouldn't. Or maybe the house was a relative's, a mother's, an aunt's, a grandmother's who passed away, and the deed is still in their name, but now you're the heir and you're the person responsible for it. So your name's not on there, but you have an equitable ownership in this house. In those cases, when there's a tangled title, which is what we call this, that the name on the deed doesn't match who really is the owner, we're offering a conditional 3-year homestead exemption so that folks have time to untangle that title but don't miss out on the homestead in the interim. And what folks in that situation need to do is complete the homestead exemption, also complete what's called the Homestead Affidavit, which basically explains why there's that mismatch. It's because I was the subject of deed fraud or I inherited the house from whomever, giving us that background. And they have to submit 2 pieces of information that sort of places them at that house, whether it's ID with that address, whether it's utility bills, whether it's a rent-to-own contract. In those trickier situations, you're not going to be able to handle that at these centers, so you should refer them back to that 686-9200 number. But so those are the only, if somebody brings in and says, I got this owner mismatch and my name isn't right, it's a little more than you'll be able to handle at these centers. But I just wanted to let you know that that's out there. So that's the homestead. Next, I want to walk you through what folks just got over the past month, which is the actual assessment notice. This is where, after a couple of years of work, we have finally come up with what do we think properties are worth in Philadelphia. And this is really what we want people to focus on between now and the end of the month. We know that everyone's concerned about bills and what they're going to have to pay. Number one thing, this isn't a bill. All this is us telling you what we think your house is worth. This is what your bill will be based on once City Council passes a tax rate. That hasn't happened yet. So right now, we just want to make sure that this information is correct. And so does everyone hear this notice of proposed valuation for 2014? So we're asking folks to look at these carefully. And the first thing we want you to do is check the sort of demographic information up top. Is your name right? Is the property address right? Does the account number match maybe what was on your bill last year? Is the mailing address right? We want you to verify that you actually got the correct information for your property. If there's a problem with that, folks should call that 686-9200, let us know, and we'll start that process of figuring it out. And, just to give you guys a sense of the volume and what we've been doing, we've reassessed 579,000 properties, all the properties in Philadelphia. Even if we got it 99% right, that still means thousands where there might be an error. So the goal of this in the next month is really to make sure that we work out those kinks, that we make sure that we have the best information possible. So that if folks, see something, even if it's just a spelling error, we got their middle initial wrong, give us a call and let us know so that we can fix that so it doesn't just become an error going forward. The hotline hours are Monday to Friday, 8:30 to 5:30. Folks can leave a voicemail anytime. So if you want to call during the weekend, want to call at night, and then you'll get a call back by the next business day. That's also true, if you call and there's a little bit of a wait and you don't have time, there's a prompt where you can hit a button, leave a voicemail, and they'll call you back. And the hotline also, I want to make sure that folks understand that it is available in English or any other language that the person would like to conduct this conversation in. And so they can ask their questions. You can also apply for the homestead exemption over the phone using that. So if there's folks who aren't comfortable doing this in English, we'll make sure the homestead forms are available in English, Spanish, and probably Chinese at these sites. But if there's folks who aren't comfortable in one of those three languages, they can apply over the phone in whatever language they're comfortable in. So and also there's plenty of information you can apply online, www.phila.gov/OPA. So next, after you've checked the sort of contact information at the top on this assessment notice, you'll see the proposed 2014 property market value. This is the big number. This is what everyone's been waiting for, what they want to know. This is what the city thinks their property is worth, what it would sell for today. And really letting people know that that's what that number is supposed to be is a big deal. Part of the problem with Philadelphia having not kept up on all of its assessments over the past couple of decades is that folks actually don't really know what an assessment is supposed to be, because it might bear so little relation to any number having anything to do with their home that they have it doesn't even make sense. I know that in the past, my assessment for my house is maybe about 10% of what I could actually sell it for. The number was ridiculous. It made no sense. And so folks seeing this for the first time might be really confused and not know, what is this for? And generally the way we come up with these things is we look on residential properties for comparable sales. What did similar properties sell for? So we want folks to take a look at this and see if it seems right to them. Is this what they think their house is worth? In a minute, I'll tell you what happens if they don't agree and they don't think that this number is right. But for the most part, if they agree, they're pretty much done with the OPA. There's not much else they need to do other than making sure that they've got their homestead and move on. So that's that number, the proposed market value. Underneath that, it'll say homestead exemption, yes or no. So if it says yes, the folks have already applied and gotten their homestead. If it says no, it means one of three things. It either means they never applied, they applied after November 15th, which was too late for me to get them on these notices, or they applied and were denied. Now, you can check online. So if maybe they say I applied, but I applied, in December. When you've got those computers at these sites, you can, look it up and see if maybe it's been updated. If they they said they applied and they think they were denied and they want to know why, if they don't have that letter from us telling us why, they can call that 686-9200 number and find out what the reason was. They have all that information there. But basically, if it says no, there's no harm in getting them to reapply. I mean, ideally, I don't want duplicate applications, but in this case, at this point, if folks are standing in front of you and it says no, better safe than sorry. If they're eligible, have them reapply. So after you see that homestead information, if it says no, on the form underneath the no, it does give you the hotline phone number and the website so that folks know how to get themselves signed up for that. After that, you'll see property characteristics. This is another area where we're telling you a little bit about what we think your property is. So when it's a house, it should say residential. After that, it should give you a sense of what type of residential. Is it a row house? Is it a single, a twin? and then it'll tell you the number of stories. And you just want to do another check there. Did we get that right? Does that make sense? If it doesn't, give us a call, let us know, because the whole point of this is we want to get these numbers right. And that means we have to have the right information about you and your house, and at the same time, we're getting all the right information about the sales activity going on in the city. So that's just another thing that folks should check on and make sure that makes sense. If it says parking lot and you know this is your house, there's a problem. Please let us know. After that, you're going to see a comparison from the prior year to this new 2014 proposed information. This is the part that begins to really trip people up. And that's because when they look at their actual what was going on in 2013, it may not bear any relationship to their true market value, what we've assigned them in 2014. So they might look at that total market value, and that's that total amount we think what the property's worth, and see a big jump from last year to this year. The number one thing to remember is just because your assessment goes up doesn't mean that your tax bill is going up. Because basically everyone was underassessed, by bringing folks up, not everyone will see an increased tax bill. Some folks will see an increased assessment, but see the same or lower tax bill as a result. It just matters how underassessed they were. Rough rule of thumb, if the number for last year is 1/3 or more of their new value, they'll probably be about the same or see a decline. So, multiply the 2013 by 3. If that's about the same as the 2014, it's all going to be about the same. Then you see that broken down into two components, that total market value, into the improvement value and the land value. And this is the way we keep track of land. It's like if that were a vacant lot, what would that land sell for? And then the improvement, that's the buildings and anything that's built on top of that. And so those two numbers should add up to the total market value, your land value and your improvement or building structure value. After that, you'll see a line that says predetermined ratio. And this goes back to what I was saying about the tax rate used to be more complicated. It used to be you took that value, you multiplied it by 32%, and then you applied the tax rate. So this is just showing that in 2013, that's what happened with that 32%. And then over here in proposed 2014, it's 100%. And this is why we call it actual value. We don't really need to multiply by 100% because it just is what it is, or multiply by 1. So you'll see that then for your assessed value, now in our simpler system, your market value and your assessed value are the same thing. Going forward, people aren't going to have to keep track of two different values of their property. So you'll see those there. Next, at the very bottom, it'll list the exemptions or the abatements. Now, this doesn't include the homestead exemption, but it includes any other exemptions or abatements that the property might have. If they have a 10-year tax abatement, if it's a church or a synagogue that doesn't pay taxes, that would list how much of that assessed value is not taxable. So that's all the information on this form. And really the key to explain to folks is, 1, check and see whether or not you think this value is the right value for your house. And 2, remember that just because this value is larger, it doesn't necessarily mean your tax bill is going up. And 3, this isn't a bill. We don't have a tax rate yet. We can't, from this you're not able to calculate how much you're going to pay. There are some calculators elsewhere on the city website that you can try and figure that out. Try a couple different rates and see what is happening, but that hasn't been set yet. So this isn't a bill. All we want you to do is check this information, see if it seems right. So I want to move ahead. If you've looked at this number of what the city thinks your property is worth and you don't agree, we're introducing this year something called the first level review.
Sorry, before you move on, how do you respond to questions about how the land versus the building value?
At these sessions, we're not going to do that. Those are the sort of things that if you have a question or a problem with those, you would put on your first level review or you call our call center.
Marissa, can you repeat the question? I don't think folks over here heard it.
If folks are wondering how we came up with the land versus the improvement value, that's going to be more complex than you can handle at these sessions, so refer folks either to complete that first level review form, which I'm about to explain, or call the 686-9200. Generally, I just want to let folks know at these sessions, you're not going to be getting into their individual account information beyond figuring out whether or not they have a homestead and what their account is. There's a process, which I'll explain shortly, of how they actually get to talk to the evaluator who assigned this number if they have questions. Is there-
How do you assist a resident with trying to find out what the value is of their property or the proposed value?
So you mean the prior value? So the prior year value and the proposed are both on this form.
Right, so you just suggested that we help them to try to find out what the value would be
No, you're asking folks to look at this number and see if they think that this is the right value.
Right, but how do we help them do that?
So it's not at these sessions your role to tell them how, but ways that folks typically do this is they look at recent sales in their neighborhood, if they've had a recent appraisal, if they know how much their neighbors' houses are worth. These are the sorts of things that folks look at when they're looking to figure out, is this number right?
Right, that's the part that I was trying to get.
Okay, so that's
Direct them to find that information.
that's not really our role. Let me try and work through that, but I want to get through this. At these sessions, mainly your three key functions are making sure that folks can read this form and know what it says, how to complete that homestead application, and how to complete the first level review. And so the first level review is sort of an opportunity for an individual information sharing between the property owner and the person who set that value. Maybe you have information that we don't have. Maybe we don't know about your leaky basement. Maybe we don't know about the railroad running through the back of your property. Maybe we don't know that, you've actually added a third-story addition and we still list you as having 2 stories and we should assess you more. So that happens. People don't want to miss stuff like that. So if you have a question about the value and you don't feel that it's right, you've always had the opportunity to appeal to the Board of Revision of Taxes. And this is a formal hearing, and you submit your application by the first Monday in November. And then you can choose this year whether to have a verbal hearing where you come downtown, you stand in front of the panel, you spend the whole day there, you have to pay to park downtown, take a day off work, or you can also do it by mail. And this is a pretty formal process for appealing. And that's still there this year. So folks, if they look at this and they want to mull it over all summer long, they can wait and still appeal in the fall to the BRT. But we wanted to do some sort of quick triage. If there's a little error, if somehow where there was supposed to be a decimal point, we put a comma, if we think you're 3 stories and you're really 2, if you don't have a garage and we think you do, we wanted to create this first level review to sort of deal with those questions quickly and easily without the need for a formal hearing. And so right in with the assessment notices that we mailed out to everyone, we included a first level review request form. And basically what this is that folks are saying, hey, can you take another look? I think something's wrong here. Those forms were pre-printed with folks' names, their property information, the account number, barcode. There was an envelope to return them right in that envelope. So we wanted to make it really easy for folks to fill these out if there was a question or problem. So, and there are 2 types of these first level review. For the most part, you're going to see the residential ones. They're a simple 1-page form. The commercial ones, those you should refer back to the hotline because I won't be able to train you on all of those today. But that asks for more information from the property owner about the income and expenses and the nature of what's going on in the property. When it's a commercial property, it's much more detailed. So in your packet, if you could look for the 2014 residential property assessment first level review request. It sort of looks like this. I know that's kind of hard to see. But 2014 residential property assessment first level review. Now the first thing I want to make sure is that folks understand that we're just talking about the value assigned to your house. This isn't about your willingness or ability to pay. This is about what is this house worth, whether you live in it, whether Donald Trump lives in it.
Hey, Marissa, can
Yeah.
you hold for 1 second and just look behind you and...
Yeah, hey there. Welcome.
How are you?
Good. How are you doing?
Good. I'm doing well. You were doing your thing?
You want to? Yeah.
Good afternoon. Just a couple things. Sorry to interrupt the training, but I might be able to answer a couple questions as well. The first thing I really want to say to all of you is thank you very, very much. It's one thing to have an idea or to want to provide some additional service to our citizens, but ideas then have to be implemented, no matter what they are and whether we think they're the greatest things in sliced bread or whatever the case may be. It doesn't happen without you. This is the largest reform of a major system in the city of Philadelphia in probably 50 years. It is that significant. We're talking about 579,000 parcels of property all across this city. Nothing like this has ever been done before here in the city of Philadelphia. Never. And your role in this, and I want to thank you again for volunteering, It means so much to me, and it's going to mean a lot to the citizens of the city. Your role in this is exceedingly important because it's a lot of information. It's fairly complicated. It's a lot to understand in a relatively short period of time, and it's about someone's house. Now, obviously, it's businesses, and it's industrial, and it's commercial, and it's stores with dwellings, and apartment buildings, and hotels, and all that. Hey, sir. But 423,000? What's the residential number?
498.
Okay. Over 400,000 of that 579 are residential properties. I mean, this city is a big city of residences. We have one of the highest home ownership rates of any city in the United States of America. We have one of the largest senior populations of any city in the United States of America. And unfortunately, we also have the highest poverty rate of the top 10 cities in the country. So we have a ton of seniors. We have a lot of folks who don't necessarily have a whole lot of means, but they own their home, or it was given to them, or transferred to them, or they bought it, or whatever they did. And for many of us, and I'll speak for myself first, your house is the wealth builder. It is the asset that you're going to have. You're going to hold on to it for a long time. You're going to pay for it for a long time. I'm grateful that the bank allows me to stay in my home, as long as I pay my mortgage. So it's the thing that you're going to have. It's the thing that you're going to hold on to probably the longest. You're going to protect the most. It's what's going to help you, if you have to refinance or borrow against it. It's an asset. You can, try to send your kids to school or whatever it is that you're going to do. It's your home. And staying in that home is critically important. Obviously, on our side of this, the government side of this, paying your taxes on your home is critically important to us. 56% of real estate taxes go to our schools. It is the major funding source from the city for public education. It's one of many reasons why we need people to pay their taxes. The other 44%, of course, comes to us. That's how we provide the services that we provide. That's what this is really about. There have been thousands of people in this city for decades have paid too much in real estate taxes because the system has been so broken, so flawed, so inaccurate, so unfair. And there are thousands of people who have not been paying their fair share in this city for the value of their property. We're trying to fix that. My grandmother used to tell me all the time that, of course, you can be house rich and cash poor. That the value of your home has nothing to do with your ability to pay the taxes on your home. That if you've been living in your house for 40 years, minding your business, you try to keep it clean, maybe you're paying every now and then, but there's a bunch of other stuff going on in your neighborhood. Houses start getting built. People start fixing up. The property values start going up. Generally, that's a good thing, but that doesn't have anything to do with whether or not you can actually pay the tax bill. That goes with that. So we have to start thinking about what kind of relief can we provide in some of those circumstances, whether it's in gentrified neighborhoods, whether it's folks who don't necessarily have the means, and especially those who have, for many, many years, been paying too much. So the Homestead Exemption is for everyone. We want people to apply. You have a right to it. It's free. It's the simplest application you're ever going to see from any government, anywhere, at any time. I think it has like 4 boxes on it. Eligibility, own the home, and it's your primary residence. You automatically qualify. We have about 100,000+ people who have not yet filled out the form. And whatever the ultimate number is on a homestead exemption, it's free. It's for you. Fill the form out. I mean, it doesn't get much better than this. So we have to reach those folks. I don't know where they are. I don't know what they're doing. Not reading the paper, not looking at TV, didn't get the information. We mailed to everybody. So these sessions are critically important to get those folks, fill out your homestead exemption. Whatever the exempt amount is, you're going to get it just for signing up. The other measures, we've got to get legislation passed in Harrisburg on gentrification with the means test. We're working on that. Council President Clark and I and others trying to get that done. What do we want to do here? Ultimately, we have to set a new tax rate. We have two goals. Unfortunately, they kind of compete with each other a little bit. Our number one goal is that we want the lowest possible tax rate that still allows us to generate the same revenue in 2014 that we had in 2013. That's $1.2 billion in real estate taxes. Where does that go? As I said, 56% goes to the school district, 44% for us. We want to generate the same amount. But the relief measures that we want, the $30,000 homestead exemption, that's presently in the law, that might change. Gentrification relief. Now we've got, stores with dwellings, those properties kind of got hit a little hard. Whatever amount of relief we provide will increase the ultimate tax rate because we have to pay for it. We still need the $1.2 billion, so no matter how much relief we provide, adds on to the base kind of number. So we want relief, and we want a low tax rate. So they're kind of at odds with each other. But at some point in time, hopefully in May, we'll figure out the lowest rate we can have and a decent amount of relief to help folks out there in the communities. We do not want to push people out of their homes. We don't want to create additional pressure. There's enough pressure on folks in this town with the economy, with taxes, school stuff, public safety issues, and a bunch of other things. Folks don't need that much more pressure, and they're worried about their homes. You are going to help calm that situation down. You're going to help provide some sanity in, at times, a crazy, kind of environment. So people are very, very nervous. You're going to help them through this process. And March is going to be a very intense time. The first level review period is at the end of March, and so that's why I decided that we wanted to have all of these sessions. Like I said, that was an idea. I thought it was a pretty decent idea, but I can't do it by myself. And that's where you come. And you're volunteering and stepping up. And I know many of you here in this room, and I'm not surprised to see a bunch of the different folks that I see here, because you're the folks who always volunteer for stuff, and you're always engaged in stuff, and you make stuff happen in the government. And for that, I really, really appreciate that. I want to go back to the one question, because I was trying to get Marissa's attention on. So, which would probably violate the rules. When folks, so you say, well, how do I know if the notice is right or wrong? How do I know that they got the number right? Well, I got mine, and I kept looking at it, and I realized they described my house, and by this point, everyone knows where I live. They said it was a two-story stone house with a garage. I kept looking at it, I kept looking at it. I said, there's something not right on this form. Well, I realized I have a 2.5-story house with a garage. Well, that changes the value. So they took a second look at it. I mean, I know I have a half-story up there. And so my assessment number actually went up because I have more house than originally the OPA, Office of Property Assessment, thought. And so they corrected it, and my assessment naturally went up because I have more house than they thought. And unfortunately, there will be some situations like that. Missed a garage, missed a story, missed, kind of whatever. So people will give us some of that additional information. But when you ask, how do you know, did they get the value right? Is it close? Whatever the case may be. On the OPA website, you can not only see your property, but for instance, you can look at your entire block. On most streets, many of the houses are exactly the same. On my street, I happen to actually have the second smallest house and the second smallest amount of property, and they're all single, so they're very different, and they're configured differently, et cetera, et cetera. But, I mean, you look at it, and I look, and I say, okay, here's mine, and then I see that one over there, and it's noticeably bigger than mine, and so then theirs is up. So, I mean, if you're kind of in a classic neighborhood in Philadelphia, in a row house community, and you see that your number is one thing and everybody else is something else, well, obviously there's something going on, and you want to bring that to our attention. So I would only suggest, is it okay, that when you go on the site, look at yours, and then look at the whole block. That's going to give you a better sense of what's going on in your own neighborhood. And if you know that your house is exactly the same size as someone next door or 5 doors down the way, and there's a big difference in your assessment number, something's going on. You want to point that out. I mean, either yours is right or theirs is right. Yours is wrong, theirs is wrong. I mean, something's going on there. So, I mean, it's that kind of stuff. We won't necessarily be able to solve every problem in the universe at these sessions. But we want people to come in. They're not always going to be able to, be on the phone or come downtown or, pay the parking or whatever the case may be. So my thought here was, and I'll close, let's go out in the neighborhoods. Let's go out where people are. Utilize the assets and the resources that we have. And the best way to do that, out in our facilities, out in a church, out in some other public place, with all of you as dedicated public servants, making an additional commitment, which again, we really, really appreciate, but helping our fellow Philadelphians better understand what in the world is going on. We're trying other communications techniques, and we got stuff up on our website, and we're talking to the press, and we're doing all this other kind of stuff. It is really, as you well know, and then I'll stop. There's nothing like being able to just sit with someone and say, how do I fill this form? What is this about? I don't understand. And then getting that information, and then, we're all in this together, and we'll figure it out. So I want to say thank you, again, very, very much. On behalf of all of us, and I mean, we are all in this together. We're public servants. We're trying to do the best that we can in an environment where, people are nervous, they're not trusting. I get that. If we're out in the community, morning, noon, and night, basically, helping people through this process, I think at the end, it's going to be much better for all of us, but more importantly, it's going to be much better for the entire citizenry of this great city. So thanks for doing this. Sorry to interrupt, but I just really wanted to come by and say thanks a lot and commend you for what you're doing, and have a great March. Thank you. Ladies and gentlemen, reintroducing Marissa Waxman.
Thank you so much for coming by.
If you have not already signed the sign-in sheet, please be sure to do that. And if folks have one in their hand, and it's all filled out, flip it over on the back and sign up for it. So we just want to make sure we have all your content.
And so how many people here have signed up for the Homestead Exemption? How many people who own a property have not signed up for the Homestead Exemption? Murph.
You want me to be honest?
You're killing me, man. All right, so do we have some of those forms? Do we have a Homestead Exemption form?
Yeah, you've got them in your packet.
Okay.
Feel free to fill them out.
You need some help?
No.
What day do you want me to help explain to you?
I got it.
Okay, so before you leave today, you're going to fill it out, right? What do you got over there? I see you slide down in your seat. Fill out the form. Okay, see y'all later. Bye-bye.
Thank you. All right, so I want to be mindful of everyone's time, so I'm going to jump back to this first level review form. And as I was saying, this is about the value of your property. In a minute, I will finally stop talking and let Frank Breslin, the Deputy Commissioner from Revenue, talk to you about all the programs we have to help people with their bills. But this first level review is about the value of the property. Doesn't have anything to do with how much taxes somebody might pay as a result. So the top part, if folks are using the one that they got in the mail, it'll be pre-filled out with their name, their address, their account number, a barcode. If folks have those, please encourage them to use that one. Makes it a lot easier for us to process. We'll be able to understand what their issue is and get them an answer much more quickly if they're using the forms that are pre-filled. If not, at these centers, you'll have blank ones where they'll just need to write in their name, their property address, and most importantly, their account number. So under Section 2, we're asking you, why do you want this first level review? And there are basically 3 reasons that are valid reasons for requesting a first level review. Now, as I was trying to say, not being able to pay the taxes, or the taxes are too much, or things like that, or all sorts of things that folks like to write on this form, that's not actually a reason to file a first level review. So you're going to want to talk through that with folks and let them know what these 3 reasons are. So the first is that the market value is wrong. You think the value is too high or too low that we've assigned to your property. It's not right. And so, yeah, you can definitely check out what are the other properties on your block and what's going on. So you would check off box 1, market value too high or too low. The second reason that you might request a first level review is what we call non-uniformity. And with that, you might think we've got the right value. We've said your house is worth $73,000, and you're pretty sure that somebody would pay $73,000 for it. You would be willing to sell it for $73,000. So we got the value bang on. But when you look up and down your block, everyone else on your block with the exact same house, their house has been assessed at $53,000. That's non-uniformity. That's not fair. The goal is we want similar properties to have similar assessments, so that even if we got your value right, but we're treating similar properties differently, you let us know that and check that off as non-uniformity. The third reason that you might request a first level review is that there was a problem with your abatement or exemption amount. Now, that's not the homestead exemption. We're still sort of working through that, getting people applied, but if it's a 10-year tax abatement property or a nonprofit or a house of worship, and they didn't see that reflected accurately, that's what they should check off. Under there, we ask for additional information. We really want people to tell us why they think we're wrong. So if it's an issue on 2.5 stories, not 2 stories, or it's every other house on the block is just like mine, but their values are lower, or I just had an appraisal and the appraiser said my house was worth $70,000 less than you say, or my house isn't in good condition like the other houses on my block. Here's pictures of my damage. So you want to write in this additional information thing, tell us why you think we're wrong. We need a reason to go off of. Why should we look at this again? Because basically, if you don't give us a reason, we assume we're right.
A question I had was, if someone has a house that they started renovations on but didn't finish, so it's not really completed on the inside, they were worried they might get cited if they submit photos of incomplete renovation, that they could possibly get cited.
Because they didn't have permits?
I don't know if it was.
So everyone should have permits. It's okay to be doing a renovation if you have the appropriate permits from L&I.
Okay, just wasn't sure if you could get in trouble for saying my property's not in good condition, so it should be valued at less.
I would say generally at this point, no, we're not licenses and inspections. We don't have the power to sort of come in and demand to see things or do those things. Certainly, I think that if we saw like a serious health and safety violation, we'd alert L&I. But generally, we classify properties based on their condition. Is it brand spanking new? Is it average? Is it above average? Is it below average? And that's part of what goes into figuring out the value. So if you think that, every house on your block, we did an exterior visual inspection and everything looked pretty much average to us, but you know that inside your house is either a palace or a complete disaster, and you think that that's throwing off your value, send us pictures. Let us know. And what will happen is after you submit this, the evaluator, they may look at that and be able to make a determination, but they may pick up the phone and call you. They may ask to come out and take a look and do an inspection of your property to figure out what's really going on. So you want to make sure in that additional description area, give us a clue about what's going on, and then you can attach as much as you'd like in terms of additional support documents. So if anything you want, pictures, appraisals, if you need a lot more room to explain what's going on, attach all of that to this form. Then in section 3, we say, okay, well, you think our number's wrong. What do you think it's going to be? And the most important one is putting the total value. If you'd like, folks can break it down into that land value and improvement value. That's not required. A lot of folks, are not going to know what the difference is between their land value and improvement value. It's usually folks with a 10-year tax abatement. Those are the ones that really care about the land versus the improvement. But all you need to do is just give us we said it was $73,000. You think it's worth $53,000. So just let us know. After that, it's just basically signing off, dating. If you're having a representative do that, having their information. If it isn't going to be the homeowner, there is a form on our website that folks need to do to say, hey, I'm letting this person be the one who talks to you about my property. For the most part, that'll be sort of rare at these centers. If folks have questions about that, refer them back to the hotline to get the full information about, if it's an elderly parent that's unable to do this, power of attorney issues, things like that. They're going to need to talk to somebody.
The section 3, the total amount that they believe if they wanted to, if a homeowner or business owner wanted to appeal, so would this be say like a professional appraised value that?
This is an initial conversation, so we're not expecting. The question was for that total value, the opinion of the person filing this, the property owner. Where should they get that number? If they have an appraisal, great. If you know what other houses like yours are selling for, use that. If you just have a guess, we're not looking for anything official here. The whole point of this informal review, you don't have to go out and hire anybody, get anyone to do anything. It's just what you think. And you can base that on whatever information you want. Some of the exceptions are when folks get to that formal BRT process, if a property is valued by the OPA at more than $1 million and they want to challenge that, we do require an appraisal be provided for properties over $1 million. So these forms, we're asking folks to submit them by March 31st. That's when we're looking to have those all in. Also, if folks didn't get it's March 31st or 30 days from when you got the notice. Most folks have already gotten their notice, so the answer is March 31st is when these are due. And, folks are nervous that they didn't realize they don't have that much time, and they're concerned that they won't be able to fill this out, which, with your help, hopefully it shouldn't take them more than a couple of minutes to sort of, once they've thought about what the issues are, to fill it out. But if folks don't make that March 31st deadline, they're not done with this process. They still can do the formal appeal through the Board of Revision of Taxes, and they have until October 7th, 2013 to do that. So there is plenty of time for folks who have a question or an issue with this value. And one of the reasons we've got that March 31st deadline, which seems like it's coming up kind of soon, is so that the OPA has time to review all of these and get you an answer before that deadline with the BRT. So if you get, our decision with the first level review and you're not satisfied, you still have that opportunity to go to the BRT. So we're trying to get through these fairly quickly. And I want to let folks know that once you send this in, the first thing you'll get is an acknowledgement letter saying, hey, we got it. The second thing you'll get will eventually be that decision letter. And 3 things can happen when you request a first level review. We can lower the value, we can leave it unchanged, or we can increase it. So keep in mind, folks, if they're maybe like, oh, I'm just trying to see if I can get something off and whatever, and then we come out and we find out, well, didn't really have a real reason for requesting it to be lower, but now I'm seeing some central air and I'm seeing some other stuff. They're going to take all that into account so you can wind up with a higher assessment. So you want to make sure that you actually have a grievance with us when you fill this out. Because all that can happen. So that's how that process is going to work. Folks that don't like the first level review, they can go to the BRT, and if they don't like the BRT, you can always appeal to the Court of Common Pleas. So there is plenty of opportunities for folks to contest that.
What's the appeal process? And how does that?
So the appeal process is that there's then a form from the Board of Revision of Taxes, which is a little more detailed than this. Fill that out, and you basically give them the same information about why you think it's wrong, why you want it reviewed. It is more complex for commercial properties. You won't be handling those in these centers. You can refer those back to the hotline. You'll get scheduled for a hearing with the BRT. They have 7 members that they review them. They make decisions. They render a decision.
Is that form available?
It'll be available from the Board of Revision of Taxes. One of the things I didn't mention at the beginning of this is in the past, the Board of Revision of Taxes had 2 functions. They set the values and they heard the appeals, which for due process and things like that didn't seem to make the most sense, that the folks setting the values were also the ones who heard whether or not, decided whether or not if you complained, you were right or wrong. So 2 years ago when they created the Office of Property Assessment, they separated those. So the OPA really just does the values. The BRT is still that formal appeal process. And basically we are separate now because they make that decision not having any stake in who made the values or things like that. So I can't answer too many questions about the BRT process other than for the most part it's the same as it's been in the past, and their information is available on their website.
For the ones that we get to apply for the homestead at the meeting, how soon would they hear from?
Probably about 4 to 6 weeks. If they get rejected, we'll let them know. Otherwise, it'll be available online. They can call the hotline and they'll see it on their bill. But right now, it's taking me about 4 to 6 weeks to process.
For commercial property owners, they have to fill out the operating expense sheet for 2011, 2012. Are their expenses their best estimates as well, or do they need to submit proof of their operations?
That you're going to have to refer folks back to the hotline because they've got all the information about what's acceptable, what's not, what it has to be based on.
If a property owner misses the deadline for the first level review, will they still have an opportunity to appeal directly to the BRT after March?
Yes, if folks miss that March 31 deadline for the first level review, they can go straight to the BRT. You don't have to go with this first. It's not a required step. So if folks miss the March 31 or they just decide they don't want to do this, they can still do the BRT appeal in October.
Can you please repeat the question?
Oh, sorry. The question was, if folks miss the first level review deadline of March 31st, can can they still appeal to the BRT? And the question is yes. This is not a required first step. You can skip it and still appeal to the BRT.
At the drop-in centers, I believe one of the first meetings is going to be held at the Coleman Library. It needs to be posted very clearly that commercial properties are not going to be dealt with. Because in that area, we're restarting the special services district. So the vast majority of people that are going to come in are going to be commercial.
Okay,
properties.
that's a good point. Thank you for letting me know. We'll make sure to include that in our messaging.
So I think questions for people who want to report errors of other people's assessments.
Feel free to dime other people out.
How would they do that?
Just call the 686-9200 number. Feel free. I mean, honestly, our goal is to get this right. And so let us know if maybe you think that you're being overassessed or it's not uniform because we're not capturing your neighbor's situation appropriately. Let us know. And we're not going to just take your word for it. We're going to go back and do that. So folks, the question was, if you think somebody else's assessment is wrong or somebody else's property information is wrong, let us know. Give us a call, 686-9200. Write us a letter. Take some photos. I got some of those letters this morning. People do that. It's fine.
One of the main reasons that we were here from Commerce was focused primarily on commercial property. Are we going to have any kind of information session internally just to kind of focus on commercial properties? I recognize it's complex, but our phones are blowing up right now.
Okay, one, you should obviously direct folks to the 686-9200 number. If you want to talk about an internal briefing, I can set that up, and I was also trying to work with folks from Commerce to set up a community event for small business property owners. So we're trying to do that for like commercial quarters and things like that because we know they have a unique set of issues. The large landowners, the folks that own the Center City skyscrapers, they're pretty much up to speed. They know what they're doing. They're actually probably going to skip a lot of the first level review. They just grab their lawyers and head right for the BRT hearings.
We are Annette in Germantown. Last year we sent out the Homestead Exemption forms and encouraged people to apply. There's still a lot of people that we didn't get to. March 31st comes.
Oh, hold on. Okay, so Homestead. Totally didn't tell you the deadline for that. March 31st is the first level review. Homestead, you have until July 31st, 2013. There is time. So for the folks that were denied and need to reapply, the folks who haven't heard it, there is time on the Homestead. We want everyone to do it right now while they're thinking about it, while they've got the notice that says Homestead yes or no. There is time. July 31st, 2013 is the Homestead date. All right, I want to make sure that you have enough time to actually hear about the tax relief programs, what people really care about, how much they're going to pay. So I want to introduce Deputy Revenue Commissioner Frank Breslin to talk you through those.
Hello, everyone. So just to be clear about the different roles, the OPA is really all about the values and establishing the values, and they've done that and they've sent out the forms so people know their values, and they've sent out the appeals. So the people that'll be coming in, some of them, their issue is going to be about the value, and revenue is not at all involved in that process. What OPA does is they transmit the value data to the revenue department, and we are really about collecting the money. So we generate the bills, and we send the bills out in December. So December of this year, we'll be generating the tax bills for 2014, and those bills will be based on the values that have been established by the OPA after all the appeal process, and some of the appeal process still may be ongoing depending on where a taxpayer is in the process. But so we'll get those bills out to all the taxpayers, and then they have till March 31st to send the information, to send the payment back to the City of Philadelphia, to us. So taxpayers coming into you, you're going to be faced with two things. I mean, in order to determine who can really help them or what information you want to give them, you have the information about their evaluation. If there's a problem with the valuation, it really resides with the OPA. But there's going to be people that come in that they either agree with the evaluation or they're appealing the valuation, but their concern is they're not going to be able to afford this, and what do they do? And that's where revenue comes in. A taxpayer once told me, he said he was proud to be paying taxes in the City of Philadelphia. He Said the thing is, I could be just as proud for half the money. So bottom line is, taxpayers don't like taxes going up. Even the proudest of Philadelphia taxpayers, this concerns them. And so the people coming in are going to be really concerned. Some of the people probably aren't going to be sure how much their taxes are going up. They won't know because the rate hasn't been established yet. We don't know it. We're waiting for that to come out. Some of the taxpayers won't know if their if their taxes are going up or down. They're just, they know that assessed value has gone up, and they're doing what Marissa has cautioned taxpayers not to do, but it's just natural reaction. They're multiplying it by the old rate, or they're just saying, based on how much it's gone up, my taxes have to go up. And that's not necessarily the case. We've already talked to taxpayers where it's kind of clear that their taxes will stay the same or they'll go down, but they've already come to the Department of Revenue wondering what they can do. So bottom line is, when you get these taxpayers and they're concerned, the most important thing is to be able to give them information and tell them that, there are plans that the Revenue Department has in place, and there's probably more plans forthcoming. So that's one of the challenges that we face, that you'll face out there, is we don't know all of the relief programs that are going to be in place. I mean, that City Council is working on that now, and, we'll know those over the next couple of months, but we don't know right now. So one of the things that I'm just trying as part of the training, is I'm telling everybody, is just to be able to tell them that there are programs in place, and I'm going to go over the ones that are in place now, but there are programs in place, and there are probably more coming. So giving them the information of where to look for these programs, what the contact information is, so that they can be aware of them and they can, meet deadlines and see what they're eligible for. So I gave everybody a packet. If you don't have one, let me know. I have some more up here. But anybody that needs a packet?
This should be in all the information should be, we copied both documents.
Okay. Everyone should have it. As we go through, if any of the documents I show you don't have, just raise your hand and we'll get one back to you. But so unlike what Marissa's training was, where it's really how to sit down and go through forms and help the taxpayers complete the applications, that's not really the goal here. I can't make you experts even in the programs we have, and I don't know what programs are coming. So I'm going to go over broad guidelines of the programs so you can kind of tell people, help them determine if they're eligible for the programs that are in place now, and also, as I said, give them information about where to look for programs that may be coming down the road. In the packet, I just put a brochure that is how to pay your City of Philadelphia taxes. This just gives...
That's the one thing that they don't have.
Okay, nobody has this, but these will probably be out there. This is just very basic information. It's telling taxpayers informing taxpayers that we take cash in the basement of the municipal services building so taxpayers can walk in and pay their bill and get validated receipt. We have satellite offices that do not accept cash but do accept checks, one in North Philly, one in Northeast Philly. Addresses and contact information, hours of operation are all in your packet. We take credit cards, we take electronic check, we're just starting to take debit cards. So there's a lot of ways taxpayers can pay, a lot of means to pay. We also accept payment agreements, so taxpayers don't necessarily have to pay all of their taxes by the due date. They can come into the Department of Revenue and get into a payment plan and pay their taxes over time. Yes?
If a person is already delinquent in their taxes, are they eligible for the program?
Yeah, so we encourage a taxpayer who's delinquent to, rather than just stay delinquent and kind of be nervous about what's going to happen, to come into the department. They can call 215-686-6442, or they can come into any of the offices and get into a payment agreement. And we'll talk about that a little bit more as I go on with the training. So the basics, I have a sheet in here with just the basics of the real estate tax, the due dates that taxpayers can pay by February 28th and get the 1% discount, that the taxes are due The ultimate due date is March 31st of the tax year. The bills are sent out in December. Some taxpayers do not receive a bill because their taxes are paid through their mortgage company. It's actually their taxes are escrowed out of their mortgage payment, and in that case, we send the bills to the mortgage company, and the mortgage company withholds the money and sends it to us electronically. The next couple of pages are just reiterate all the basic information about the tax. I didn't really give this to you as handout. I just gave it to you as something you can read, something you can have with you, kind of a cheat sheet while you're out there so that you can refer to it. Department of Revenue employees will be at all of the outreach sessions, so we'll have people there. Their role will really be to get into the detailed questions, so we really want you there to kind of be able to triage whether it's an OPA issue, whether it's a revenue issue. If it's just a basic question and we've covered it, hopefully you'll be able to answer the questions and satisfy whatever the taxpayer needs to know. In the event that the taxpayer needs more detailed guidance, then you would refer them either to the OPA or to the Revenue Department staff. What I do want to give you, the most important part, I want to give you an overview of the relief programs that are presently in place so that you'll be able to help a taxpayer determine if any of these existing programs are helpful for them and if they are eligible, because a lot of them have financial guidelines. So you should have a sheet that says City of Philadelphia Real Estate Tax Relief Programs, and it has a list of the programs administered by the City of Philadelphia and a couple programs that are administered by the state of Pennsylvania. The first program on the list is the Low Income and Extended Term Agreement. Internally, we just refer to this as a hardship agreement. And behind that is the first application in your material. This program has income guidelines that are based on household size and gross monthly income. So you'll see that criteria on the back of the front page. Front page gives you, some overall information. This application comes into the Department of Revenue. So the income guidelines are just to determine if the taxpayer is eligible for the program, but it is not to determine what amount a taxpayer will pay. So if you have a taxpayer and they tell you that they're low income, they're not going to be able to pay, one of the first things they can look at is you can show them this. They can look at the household size, the gross monthly income, and see if they fall into these parameters. If they do, just encourage them to come into the department. It's not something that even is easily, it's not practical for them to fill out this application at any of these outreach sites. They really need to come into the Department of Revenue because they're going to need to bring income information. And we don't kind of want that information floating around out there. It's confidential information. We're going to need Social Security numbers. So just encourage them to come in. But the way the process works is when they come in, we then determine their net income, basically what income they have left after they pay all their household expenses. And based on that income, we determine how much they can afford to pay. So we do have taxpayers that after going through that process, their payment ends up being as low as $25 a month. And that's not going to put a big dent in their real estate taxes necessarily, but it's what they can afford to pay. And as far as the department's concerned, even though they have a delinquency, they're compliant. So there's no kind of enforcement action taking place. I mean, people, we hear it all the time, people are afraid of losing their home. If they come in and get into an agreement, once they get into any type of a payment agreement with the department, they're considered compliant, and we're not taking any kind of enforcement action against them. So this is really important, especially for the people that are going to have pretty low income. Yes?
Yeah, for calculating the gross monthly income, is SSI or SSD, are those calculated at 100% or less?
The question is, for calculating gross income, is SSI factored in 100% or less? It is, for this purpose, it's factored in at 100%, unlike some other programs run by the state where they do 50% of SSI. This is 100% of SSI. Mike? Yes, everyone. The question was, is everyone eligible for this? The only restriction is the income, and that's correct. You don't have to be a senior, or this is strictly based on income.
Okay, and it's based on the gross before they can make these other deductions.
Gross income is the criteria as to whether they're eligible for the program, and then net income is the determining factor for the amount that they'll pay monthly. Yes.
Did you say that you encourage applicants to come into the office to fill out the form and submit their paperwork?
Yes, yes. This gets fairly complicated, so we encourage a person to come in and sit down with a representative, and we'll walk them through the process.
And how would they go about setting up an appointment?
There's no appointment, so it's walk-in. It's walk-in only. Obviously, at real estate time, right now, there's a wait. We have a lot of people, so generally there's a half hour or so, 20-minute to half-hour wait. Early in the day, late in the day is better than midday. But yeah, it's walk-in. There's no appointments, and they do agreements at the satellite office. Municipal Service Building, Concourse. Yes. Okay. The next program that I want to talk about is the Senior Citizen Low Income Special Real Estate Tax Provision. And that is known internally as the tax freeze. That's what most taxpayers know it as. This is a really important program right now. There's a sheet that is kind of the cheat sheet for the senior tax freeze. It's a program that provides low-income senior citizen taxpayers an opportunity to receive forgiveness on their real estate taxes. But basically what it means is if a taxpayer qualifies for the tax freeze and files the form, for the year that it's filed, their taxes are frozen at that level and will not go up as a result of an increase in the property value or an increase in the tax rate. And when the bill comes out each year, it shows the total amount of tax, and then there's a line that says credits, and the amount that they're saving from the tax freeze shows there, and then the net tax is what is due. And then they're still eligible for the 1% on the net tax that is due. So it's a great deal for anyone that qualifies. They can freeze their tax at the current, basically at their current level, and it's not a deferral program. The tax that's being frozen does not accumulate and have to be repaid at some other time. It's a pure tax freeze. Now, in order to qualify, a taxpayer needs to be 65 years of age or older, or a spouse who's an owner of the property, 65 years or older, or a widow or widower, 50 years old or older, whose deceased spouse was 65 years or older. The income guidelines are income up to $23,500 for single and up to $31,500 for married. The application deadline, and it's actually a soft deadline, but we put it as a due date on the tax return, is October 15th. So October 15th of this year would be when we would encourage people to apply for the tax freeze. We actually give them till January 31st is the legal date to file, but if they file by October 15th, then the tax freeze amount will be reflected on their bill, because we calculate the bills in November, send them out in December. If they file past the December date, it gets a little confusing for the taxpayer because the amount of the freeze isn't reflected anywhere on their bill. But they are still frozen, and they can pay the lower amount. They would just have to contact the department to get that amount, or if they paid the whole amount on their bill, the amount that they overpaid would end up a credit on their account and go towards the next year. Legal deadline is January 31st of the following year. So for this year, it would be January 31st of 2014. If we receive it timely and they're approved, they get it, they get the tax freeze. Their taxes are frozen, but it's not reflected on their bill. So we find that in that case, seniors tend to be confused. They're not sure if they have it, they don't have it. Sometimes they send in the whole amount due because they're nervous about underpaying. In that case, the amount that if they paid the full amount due, the difference, the overpayment essentially would serve as they could ask for a refund, or it would end up as a credit on their next year's taxes. But that's why October 15th is the preferable deadline for that. So really, any taxpayers that meet this, encourage them to apply. This is really valuable, especially this year. And the application is here. And again, it's not something we're encouraging you to go through the application with at the site. There's plenty of time till this is due. Just go over it with them. They can take it back. They can contact the department for any information that they need. But I think just letting them know that the program is there, that they may qualify. There's a lot of taxpayers that just don't know what relief programs are out there. And this is really a great opportunity to get some of the taxpayers who have qualified for years and haven't taken advantage of these programs for whatever reason to take advantage of it. The next program that I want to talk about, any other questions about the tax freeze? Okay, the next program I want to talk to you about is the Senior Citizen Low Income Installment Plan. All right, and I have the application as part of your package. This is a program that gives taxpayers, this goes out with every tax bill, so every taxpayer should know about this program. Still, we probably have a lot of taxpayers who, they don't read the stuffers that are in with their bill and they haven't paid attention, so, it's really important to talk to taxpayers about this. This is a program that gives low-income taxpayers and low-income senior citizens taxpayers the opportunity to pay their current year taxes over the year. So they have to pay the taxes due by March 31st. They have until December 31st to pay the taxes. So that's really valuable because a lot of taxpayers, the concern isn't that they can't come up with the money. They can't come up with it by March 31st. That's really the issue for them. And this gives them the opportunity to pay the taxes out over the course of the tax year. The filing deadline is February 28th of 2013, but we are accepting these for the current year. For people for their 2013 taxes, we're accepting them through March 31st. And what it gives the taxpayers, again, there's an income criteria here. It's on the back of the application. It's based on the number of members of the household. If they're eligible, they get the opportunity to pay the taxes over the year, as I explained. For the first year that they're eligible, the taxes will be paid over 8 months. Because since they have till March 31st to file the application and be approved, there's no way to spread it in that initial year over the 8 months. So we send them a coupon book with the first payment being due in May, and they pay the taxes over May through December. In the following year, they're automatically in the program. They have to let us know if their income changes and they don't qualify. They'll receive a payment, they'll receive a coupon book every year, and it'll be a monthly payment, 12 monthly coupons. So really helpful to taxpayers. Senior citizens, there's a box here for senior citizen taxpayers to select up to 20 payments. We really discourage that. And we end up with most taxpayers being in the 12-month program. The law allows for up to 20 payments, but it does not work well for most seniors because the fact that 20 payments goes into the next year, they actually become technically delinquent on their taxes. There's a lien goes on their property. So they don't generally want that to happen. The other thing is most of these taxpayers are filing for a real estate tax rebate with the state of Pennsylvania. One of the provisions of that program is they've paid all their taxes, they're not delinquent, so it eliminates them from being eligible for that program. So most taxpayers, it doesn't work for them. So the 12 months is much better than the 20 months. And we have very few taxpayers that take advantage, senior taxpayers that take advantage of the 20 months, but it is an option. Okay? Again, I'm not going over these line by line because I really don't anticipate you filling these out with anyone. Our staff will be there. Anyone needs clarification on a specific line. But a lot of the taxpayers, once they're aware of these programs, they'll actually, if they're having somebody do their taxes, they'll just bring the program into their tax preparer. And the tax preparer will have all the documents in front of them. They'll prepare this as well. That's the easiest for the taxpayer. One thing that I failed to mention on the senior citizen tax freeze, taxpayers that apply for that and are approved, they're in that every year. It's a one-time application, then we keep you in the program. You have to let us know. We do income checks, compliance checks sporadically, but we put it on the taxpayer to let us know if their income has changed. So once they're in it for good. These are pretty user-friendly programs. Apply once and you're in the program year after year. The other program that I want to mention to you is a very specific program. This one is a program for active duty reserve and National Guard members on active duty outside of Pennsylvania. Yes. That's the deadline, but we're accepting them through the end of March this year. So we're accepting them right through the deadline of payment of the taxes. All right. This is a very underutilized program, and it's for any reserve or National Guard members who are on active duty service outside of the state of Pennsylvania. So they don't have to be on active duty for the entire year. It can be any portion of the year. It could be their 2 weeks that they do in the summertime. And as long as it's outside of Pennsylvania, they're eligible for a credit on their taxes. So basically, for the amount of time that they're outside of Pennsylvania on active duty service time, they'll get a credit. It's prorated for that portion of time against their taxes. So there's really no reason, there's no other eligibility to this, there's no income guidelines. I mean, if they meet that criteria, there's a credit. So this is an opportunity. I mean, it's maybe a very limited population out there, but it's an opportunity to make people aware of this credit. And the form's pretty straightforward. And as I said, it's really underutilized. We know that there's many more taxpayers on active duty than are filing this form. We've actually made contact with Veterans Affairs bureaus to make them aware of it so they can spread the word, but we still feel like it's being underutilized, so this may be an opportunity to get the word out there on that. They're the programs that are currently administered by the Department of Revenue. So I want to stress that although they're the ones that are currently in place, we really anticipate that there's going to be more relief programs coming, and that's the message to give, that, stay in touch with the Department of Revenue, check the web page. They have contact phone numbers, web information I believe is in here. There's going to be a lot of news coverage about all this, but really it's just to stay in touch and see what's coming along. I have two other programs that I'm going to touch on really briefly. They're not administered by the state of, by the city of Philadelphia. They're administered by the state of Pennsylvania, so I can't give you a lot of detail about these, but you can just make taxpayers aware of this. The first one is a Disabled Veterans Real Estate Tax Exemption Program. Okay, so this is for military personnel, and this is for anyone who was any veteran who was totally disabled while in service. And this is, I think, very unknown, but basically it says, it's in the state constitution, and it says that anyone who meets the criteria of totally disabled, service-connected disability does not have to pay real estate taxes in the state of Pennsylvania. So, so anyone who meets that criteria in the city of Philadelphia is exempt from real estate taxes, and the information is here of how to apply. They would apply through the state of Pennsylvania, Veterans Affairs Bureau, I believe. And the other program that I just want to make you aware of, I think most of you probably are already aware of, and a lot of taxpayers are, but there's still a lot of taxpayers that do not apply for this, and it's the Property Tax Rent Rebate Program. And this is a program through the state of Pennsylvania. It has income guidelines. I have an application. It's a PA 1000. It's commonly known as the PA 1000 form, and the income criteria is on the application. Homeowners can earn up to $35,000 a year and be eligible for a rebate. The rebate, depending on their income, is anywhere from $250 to $650. And renters with income of $15,000 or less can get a rebate of $500 or $650. So this is a really great program. I mean, it's a check-back program. They apply by June. They receive a rebate check before the end of the year. And this kind of links back to that installment plan that I talked about. It's why we don't want taxpayers to go into that 20 payments, because they may be excluding themselves from this program if they do that, and they don't want to be giving up that money. So with that, there are all of the programs that I wanted to cover. Are there any other questions? No? Okay. Thank you.